Okay, let me start the webinar. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I was giving part 1 of Tracking the Forex Market Together webinar during start of the European session between 8 and 8:45 GMT and explained to you my trading system, how exactly we can take positions in the market by making very quick analysis and understanding of the type of moves they are making in the market. And I'm going to show you the results now in part 2 of the webinar. So they are live positions taken during that of the webinar, and then subsequently I'm going to show how exactly that positions are being handled. So I kept a buy order in the case of euro, and that was not filled. So subsequently, when euro has already gone up and during the part of the webinar, so I just removed the order. Then afterwards, in the case of GBP, I told you that I had taken a position 1.5457, and then I was explaining to you that they are making the extended move for 2 hours, and that means they have been holding below that of the initial low 1.5473 and oscillating between 1.5452 and 73, and subsequently made a brief downward stop of 1 pip just to create the fear to that of these traders and start going up. And then they just gained above that of 1.5473, stayed there for 30 minutes, and making use of the data release, they immediately started making the upward move. And they came up to that of 1.5603 and started hovering around that of 1.5570 to 80. And that was the mid-session. So as I told you, that they will be very active during that of the early and the late sessions. And the mid-sessions, they handle the crosses. So I waited for the late sessions to commence, and then subsequently, it went up to 1.5635 and stopped cutting that new high for 30 minutes. I closed it around 1.5627 and made about 170 pips profit. So this is what you need to understand. So what they intend to do, you should be able to read it. And then you'll be able to really find that the market is giving plenty of opportunity for us to make the trades. And instead, if you try to depend on some of the statistical analysis, invariably what happens, they give the delayed signal by the time the market would have gone up. Or sometime they'll give a very late signal. As a result, you find that the market is going to reverse from such scenarios. Then in the case of yen, I took a buy at 123.41, and it was not going higher to that of 123.41 and above. So I could not keep stop at entry, and it came down and hedged me. The sell stop was filled at 123.11, which was placed 30 pips below. And then subsequently it came down to that of 122.92 and stopped cutting the new low, started gaining the level. So I just closed it at 122.95 with 16 pips profit, the hedge, and kept another hedge order 30 pips below 122.65. They started gaining the levels. So they will gain above that of the initial high, 123.23, and then they will start gaining the levels as well. Now, as you've seen, during that of the Japanese and the early part of the European session, they have been making the contrarian move in the case of USDN and US GBP in order to make an upward move. And since GBP has gained so much, they wanted to show the USD weakening move in the market as such. But still, you come across the contrarian move. USD CAD and Australian dollar are showing positive net change. And then they intend to gain the level in the case of USDN as well, and also in the case of USD CHF. That is how they handle the crosses. Then in the case of Australian dollar, I took a buy at 74.28, and that was not hedged. And then late session, they made one quick upward move and then went up to 1.7478, then not going above. So immediately I grabbed the profit at 74.75, and that was about 47 pips profit. So this way, we need to understand that only if you look into the live market code page and find that they are not cutting the new high, cutting the new lows and things like that, you'll be able to handle the positions. Instead, if you look into that of the charts and things like that, you expect the charts or the analysis to give that outcome. And by the time you would have actually missed all simple understanding of the market. So basically, keep in mind that the market is made in a very simple way, the moves, because the banks are placing the orders and they are trying to rig the market on the upside as well as the downside. They quickly gain the levels and book profit. They quickly drop and buy back against it of the sell positions. That's what day in and day out they do. And only thing is what sort of moves they are doing it in the market we need to find and then enter into the positions. So as far as the positions taken during that of the European session, only one position is left, that is USD-Yen. I got a buy at 123.41 with a hedge order at 123.65, and now they gained to that of 123.12, so I can move the hedge order 30 pips below that of the market. So I can just keep it at 122.80. So this way, we can continue to move until we are able to keep stop at entry in that of the buy position. Then try to book profit on the buy side as well. Hope you are able to understand how we are able to quickly take a decision on trading and we are in the money. So now in this session, I will try to just read the market for you with the help of the live market code page. And those of you who attended the first part of the webinar, you know how exactly the market was in the live market code page and subsequently how by late European session, the levels are altered. And those of you who have not attended the part one, you can just go to fxtrade.com and there you find that webinars here. And you just click the webinars. You'll be able to find that tracking the forex market together part one is already in display. And then you can just listen to that and also later on understand the part two is also being recorded and listen to part two, then you will be able to get a overall picture about that of how exactly I have taken the trading decisions. Now, coming to that of the levels in which we have been watching it, so we need to first of all understand that what was the initial lows and the highs by Japanese session around 3:30 GMT, and also know what was the forecast for European session, whether the forecast has come true, and what is the forecast for the US session. Now we're in the gap time. 13 to 13:30 GMT is the gap time. Then 13:30 onwards, the US session starts. So we should be able to find what sort of moves the players intend to make during this particular time frame. Then after doing the market reading, we will also touch upon the trading strategy. So we note down the initial lows and the highs around 3:30 GMT that I showed it during that of part two of the webinar. Anyhow, I will also show again the forecast. So the forecast was on 14th, that was shown on Monday, and that is also recorded, which is available in fxtrade.com. Then they are expected to make the swing and firm up move during that of the European session, and 13:30 onwards the US session starts. Now we are in 13 GMT, so that means we are in the gap time. 13:10 is a gap time. Gap time moves are false move. Then afterwards they are expected to make the swing and slide move. The swing and slide move in the market. So this is what the forecast says. So it is not ideal to do buy and sell trade. Instead, we can do sell and buy trade, or you can wait for the market to drop and again take buy position after the drop. Then with regard to the initial lows and the highs, what they are set and currently where exactly the market is, Euro formed the low 1.0974. They just made a brief downward stop and start making the rise. And 1.1012 was the initial high. They've gone above from there for about 70 pips and come down around 30 pips from there. So this is what they made, a quick rise and dropped. Then in the case of GBP, and 1.5491 was the low, high, and 1.5473 was the initial low. That is what I was telling you, 1.5473, 1.5452. They've been oscillating for 2 hours and then started making the quick rise after that of the second hour. Then they used the data releases and SQs went up to 1.5603 and then oscillating around 557080 started making one more upward move. Why they are doing like that? So they quickly gain first and afterwards mid sessions they handle the crosses and also book profit. They gain and sell. After booking profit, many of the traders think that, okay, they are going to make a drop, so they also try to do the sell. And when they do such selling after the rise, what happens? The players make one more rise and they know very well where their stops are. So they keep 30 pips above that of the earlier high what they are shown, the stops. So they went up to 56.35, hit the stops and start making the slide. So they don't simply encourage you taking position soon after the first rise. So you have to wait for the third rise to happen and then take the sell position. So there comes your patience. So you have to understand how the players make the moves, and players make the move depending upon the large decisions of the herd of traders. When the herd of traders take the decision like that, okay, market has already gone up, so I cannot do buy and sell trade. Let me do sell and buy trade. So that's what they sell, and afterwards the players gain one more. And once they gain like that, automatically those who are sold after the rise come for short covering quickly, and the players are in a position to sell bulk to such short coverers. So that way, without dropping much the market, they are able to exit out of the positions. There comes the smartness of the players. Then in the case of USD-Yen, they came down below that of 123.39, which was the initial low, and came to 122.92, and they are holding around 123.14. After about 2 hours, they will start gaining the levels because already they have started reversing. In the case of Euro and GBP, slowly they will make the slide because at that time when a trader has taken a sell position and stopped out when the new high was formed, and the trader immediately develops the feel that it is better to do buy and sell trade. When they make further downward move, we'll try to take a buy. That's what they'll take the decision. And afterwards, when he takes a buy, then the market continues to drop. So there comes the wrong decision making. So where is the mistake? What is the mistake the trader is trying to do? Why he is losing continuously when he takes a decision of that nature? See, basically, one need to understand that they are capable of making about 150 pips up or the down move in a day. So when they are making such moves, They follow certain patterns in order to trap the traders. So we need to identify those patterns and then try to take positions accordingly. Otherwise, simply, if you try to take the positions, then you might be vulnerably trapped. And I have been telling you that once they gain more than 75 pips, then it is unlikely for them to reverse the market. So they are making the dip now in the case of Euro and GBP. Mainly, it is a gap time. Gap time moves or false move. So afterwards, what they will do, the first 30 minutes of the US session, they will quickly gain the levels, take out the stops above that of the high, and then start making the slide, book profit. Because at that time, the traders will think, okay, because of the US data, Euro and GBP are to rise, so they will wait for a small dip in the market to take a buy, and that players will trap them and continue to make a downward move. And why they are doing like that? Because they wanted to accumulate as much as positions as possible from that of the market during the third quarter beginning time. That is why they are taking such a long time, 2 to 3 weeks, to accumulate positions. Afterwards, they will try to make one-sided gain in, and you will find every day the gain of 150 pips and things like that. And then afterwards, they will try to book profit in their huge positions. Then in the case of Canadian dollar, I was telling you that they are not likely to make a drop, and they are still holding around that of 1.2764 and 5861 gap time. They are making a small dip below that to hit the stops, and then again they will try to gain the level to the higher level, so they will not come down. So initially they made a downward stop and below that, and then started gaining the level, and then again they will continue to gain and hold because they are handling the crosses of the Canadian dollar. Then Australian dollar 73.88, the low they are not breached, 74.32, they breached and gone above, went up to 74.78 and come down during that other gap time in order to continue to gain the level during early part of the US session and slowly make profit booking move. That's what we understand by doing the market reading, comparing the current level with that of the initial lows and the highs, which we have noted down around 3:30 GMT. Then we have to think of the appropriate trading. So I'll close that. So 13:30 GMT is the start of the US session. Now 13 to 13:30 GMT is the gap time. So first 30 minutes, 13:30 to 14 GMT, we are supposed to watch the market. And if they don't breach the new low or breach the low and they are holding closer to low, we can do a buy and sell trade. If they are holding near the high, not breach the high for more than 30 minutes from the start of the session, we can do sell and buy trade. So now closer to high, you come across in the case of Euro and GBP, and closer to low in the case of USD Yen and USD CHF. So you can wait till 14 GMT and then try to take the positions. Gap time trade, we understand that they make the false move during the gap time. So during the gap time, what we can do is when they make a dip, we can try to take a buy. And afterwards, in first 30 minutes of the session, they will gain level. We can quickly book profit. You might be able to get about 20-30 pips profit during that particular gap time trade. So ultimately, what is most important is you need to use the live market code page, identify the type of moves they are doing it. After noting down the initial lows and the highs, then you will be able to really get a better understanding of the market. During the early and the late sessions, they make the stop and move, how quickly they make the moves. So during such moves, if you try to take positions, then late sessions you need not even watch. Late sessions you can watch and take positions. When they quickly gain the level, take a sell position, you will be able to see about 30-40 pips profit. They quickly make a drop during the early session, take a buy. Late session, they will do opposite to that. They'll be able to really book profit. So this sort of understanding, if we develop it, And also during the data release, if you are able to understand the false move, you try to take position. Otherwise, simply ignore it. Simply don't avoid taking positions during data release, because you need to really fine tune. If you are really afraid of the data and its influence on that particular currency, then you might become nervous. So like non-farm payroll, etc. When they release, everybody will be talking about that release and say that, okay, if it is lesser, then US dollar will weaken. If it is stronger, then the US dollar will become strong and things like that. So when people give discussions of that nature, you might find it difficult to understand. Then in that case, keep away. If you don't bother about the data release, you only carefully identify the type of moves, like a false move before that of the data release, false move during the gap time. Then you can straight away take the position just 1 or 2 minutes before that of the data release, when they are making a downward move or an upward move. If they are making an upward move just 1 or 2 minutes before that of the data release, that means after the data they wanted to drop. They hit the stops and then drop, or they just drop and hit the stops at the lower level and start gaining the level. These are all the only possible moves they do it. So false move gives a great and quick profit booking opportunity, provided you identify the false move properly. Then the extended move is the one they just make an upward move or a downward move and hold it for more than 30 minutes up to 2 hours. And the gain will be invariably a quick move, or the drop will be a quick move. And then they reverse the market after 2 hours. They hold it and accumulate the positions. Sometimes they hold and distribute the positions at the higher level. And afterwards, they try to make the intentional move as an alternative move. Intentional move is a slow move which happens for 2 sessions and the start of the 3rd session. And slowly they will make the slide in the market pip by pip. They will cut the new low and cut every 30 minutes the new low and start making the slide. Similarly, the intentional move can be on the upside. After making a quick drop, they can slowly gain the level pip by pip. Every 30 minutes, they can cut the new high and continue to gain for 2 sessions and the start of the 3rd session. So this intentional move indicate what is their intention for the day. That is why it is called intentional move. And during the mid sessions, without breaching the high or the low, they will try to make the swings. So if you could understand these type of moves, then trading becomes a child's play. That's about hedging, but in the US trading platform, the hedging facility is not available. So if you could ask your questions, if you have questions and you like to know the answers to that, I'm willing to answer to those questions. Then Tafita asked a question, what is the correlation between GBP trade and the data released? Okay, now as far as GBP is concerned, they had 2 events. One is the governor's speech, another one is the data release, and they made use of it and quickly gained the level. Now you find that GBP is making the slide. Why it is making the slide? We cannot question all those things. Now, why it is making a small foam up and then slide, small foam up and slide. Euro also made a slide after gaining the level. So for every 30 minutes, we cannot attribute any reason. Please understand that. And also, I will not correlate any of those moves with other currencies or with other markets. It may appear because you happen to follow the chart, and in the chart you may come across that the moves happen to be similar type of moves. And such coincidences, if you think that they are correlated, you might be vulnerably trapped in the market. Sometimes you might find that gold is dropping and also euro is dropping. Immediately, if you try to correlate euro and gold, then when gold started dropping, if you try to take a sell position in euro, euro might go up. So don't correlate. That's what my humble suggestion will be, because ultimately you need to earn money from that other market. And it is not the question of trying to understand what the players are doing it by using wrong examples, by simply correlating the moves, because the players do different strategies in different market. So that we need to understand. Also, in currencies wherein the volume is relatively less, they use a different strategy. The currency wherein the volume is more, they use whatever the strategy I just explained. So you should be able to differentiate that and understand. So my humble suggestion will be avoid correlating. If you see that GBP gained so much, whereas euro has not gained that much, Australian dollar has not gained that much. If you think that GBP has gained, so automatically euro and Australian dollar are to go in, are also expected to gain, then you might feel disappointed. Suppose if you have failed to book profit and simply hold it, they may show loss in your positions. All these things happen because people tend to correlate in FX trade. How would you trade if you miss the start of the session? Do you still monitor for 30 minutes from the time you start watching the market? Yes, we can do that. We can watch for 30 minutes, and if the market closer to low, we can take a buy. If the market is in the middle level, you should not. Similarly, if the market is near the high and 30 minutes of observation, if the high has not been breached, you take a sell. Definitely you can do that. Then tough it up. Why not make this session twice a month? Thanks for this suggestion. But I have been giving twice a month. And see, first of all, you have to understand I have got other works to do. I'm also a consultant to various institutions. So when I am not in a position to accommodate giving the forecast webinar on every Monday and also tracking the market webinar, then finally I gave suggestions to FX Trade that I'll give once a month tracking the forex market together. So if you ask Maud in FX Trade, she knows how I was giving on a daily basis, almost 4 days in a week, Asian session live market analysis, and also twice a month tracking the forex market together webinar. They're all recorded and placed. And thing is, it is not me giving the forecast or me giving the webinar. The best thing what can happen to a trader is he is able to understand it. I can hold that hand and try to give the suggestion how exactly they can do it, but you should grow and do it on your own. There comes the greatness of a trader. Then Amir has got a question. What do you think we should do with the GBP at this point? Okay, GBP gained the level, and afterwards they made a small dip during the gap time, and the gap time is going to get over, and you watch for 30 minutes from 13:30 to 14 GMT. If they don't breach the high 56.35 or come up to that of the high and not breach for 10 minutes after reaching there, take a sell. They will make a slide during that of the US session. And the USD yen, okay, USD yen, I got a buy position and already buy position at 123.41, sorry, 37 is 123.41. So that position I will hold until I'm able to book profit in that. On the sell side, I booked profit. And the buy side, I have to book profit later on when they rise the levels. Then Chowkiat. Euro GBP cross is a good buy level. After the gain, how can it be a good buy level, sir? First of all, understand it. they gained so much. GBBM, if you see, they gain about 100 pips. After gaining 100 pips, and it is in the middle level or closer to the high, the low is far away. And if you try to take a buy, and you have to necessarily keep the hedge order, and if they hedge you, then you have to handle it carefully. Instead, you wait for the next low to be formed tomorrow, and then try to take a buy position. So after the gain, if you try to think that you can buy and aim for about 20-30 pips profit, but the risk is very high. Buying after that of the rise is a risky proposition. Selling after that of the drop is a risky proposition. See, if you are a strategic trader, and if you are in a position to trade without much delay, and you are able to take appropriate decision at the appropriate time, then you can do it. If you're an ordinary emotional trader and the equity is very less and you have to protect it, then avoid such trades. Do a simple logic trade, buy near that of the low and book profit near that of the high, rather than going for a technical trade of buy after the rise and aiming for about 20-30 pips. And already they gained so much. And if you think that further gain is there, let others enjoy it, not me. That is how we should be. They already gained about 115 pips in the case of GBP. Then they can gain another 35 pips. So do you think that it is wise to take a position and book 35 pips profit? The risk is very high. At the higher, after the gain, buying is a risky proposition. So be a simple trader. Will be able to consistently earn money from the other market. In Aditya, in Euro and GBP, after how many pips do you move stop to entry? Yeah, once the position makes about 25 pips profit, I move stop to entry. So as far as European session is concerned, US session is concerned, it is going to start now. Okay, now just start up the US session, 1332. And but I was got a question, how you put the profit taking? Profit taking, you keep a mental limit order if you want 45 pips. And if the going is good, you just think of booking 75 pips profit. And when they make a spike like this, what they had done it in the case of GBP, then you try to capture about 100 to 150 pips profit. So in profit taking, don't take a decision straight away. Instead, keep a stop at entry in the position. And after keeping stop at entry in that of the buy position, you trail it maintaining about 15 to 25 pips away from that of the market. When they suddenly make a spike, don't immediately rush. You wait for them to retrace and then go up because they gain the level to book profit. So they quickly gain about 30-40 pips and book profit for about 20 pips. And then again gain and book profit for 20 pips. After the second gain, if you move your trailing stop manually, your stop will not be hit. Then you try to see that they go to that of the maximum pip change of 150 pips. And also the new high has not been breached for more than 30 minutes during that of the early or the late session. You simply book profit. That is how the take profit decision should be. In the case of AOD, the high was formed during late European session. So I closed it closer to that level. So that is how the take profit decision has to be. So if you think that mathematically you can calculate the levels and do it, and all such mathematical calculations will not work in a real market. Because in the market, the volume brings in with regard to the amount or momentum in the currencies and also the amount of net change. And this volume can change from time to time. Suddenly, all the traders might enter in, or all the traders might withdraw from that other market. So, this volume variation is bound to happen from time to time. And also, during that of the year session, the Japanese traders might go to sleep. The European traders might be waiting to exit out of the market. That sort of scenario you will come across. So, the volume is not going to be constant forever. And also, we don't have any mechanism to understand the volume in the market. So keep all the information in mind. We have a lot of constraints. We will not be able to read the market fully. But the only way we can read the market is using the live market web page. So carefully use it. Understand with the help of the net change what they are trying to do it in the market. I was telling you during the Japanese and the European session, they have been predominantly doing the contrarian move. And now you find that the majors are showing the USD weakening move, but the commodity pairs are doing the contrarian move. That means what? The commodity pairs, they are trying to handle at the moment. All the commodity crosses, if you watch, you'll be able to understand that they are making the, see, JBB CAD has made about 154 pips net change. So all the AUDCH, okay. AUD CAD about 76 pips, Euro CAD about 71 pips. So the commodity pairs, and especially the GBP commodity pairs, they have made big moves in the market. That's how they handle the market. Okay, Bista has got a question. What do you feel about the gold and silver trading since the price is a multi-year low? See, as I explained to you, that the players keep all the markets at multi-year low mainly to accumulate the positions. So they are accumulating the positions. So when they are accumulating the positions, they will try to see that you don't book much of a profit. So that you take a buy, and if they don't rise, you sell it back at a loss. You buy, sell it back at a loss. So they are able to sell it at a lower level, say 11556, and buy back at 1150. They are just consolidating with a downward stop and moves. And afterwards, they will slowly gain the level and they will not retrace. And commodity market, they will focus on it depending upon the seasonal entry of the traders, especially the seasonal entry of the traders. Whenever they come across huge profit in other commodities, then they will try to invest it in that of gold, silver, and metals, etc., oil, etc. Then such money will be used to rig the market in a big way. At the moment, they are just handling the currency market, and also in the stock market they are just holding high and booking profit with regard to the stocks, and later on we'll come across the exactly opposite situation. So what they are doing at a given time, we need to perceive it. And do you think this strategy brings consistent profit? Yes, sir. I've been talking about it. You can just listen to the webinars which are available from 2005 onwards in FX Trade. But actually, I've been giving the web question and answer session, etc., from 2001 in FX Trade. And 1998 onwards, I have been giving the forecast in the market. And much of the trend reversal I pointed out with regard to the time frame. And I see that they are not changed their strategy. And they continue to do the same type of move or similar type of moves in the market, irrespective of the volume variations. So that is what I find. There is no other option than to rig the market this way by that of the players. See, your session, they started making the slide. Then another question. Then USDN is expected to gain the level. That's what happening slowly. And you can do buy and sell trade there. And Euro GBP cross is a good buy level. Yes, definitely. Euro GBP, you find that Euro is on the positive net change and GBP is also on the positive net change. Earlier during the upward spike, you know that Euro GBP was Euro was in positive, Euro was in negative net change, GBP was in positive net change. That is a good buy level. So Euro in negative and GBP in positive around 70, and the pit value is very high in the case of Euro GBP. You know that it is double. So watch carefully and try to take a buy near the low, and they will start gaining the levels. Any other question? Okay, there is another question. There are some more questions here. Do you recommend trading if the net change is beyond 75 pips already? Yes, you can do a buy and sell trade, but you have to be very, very smart. If they hold the net change is more than 75 pips and they continuously maintain about 80, 85 pips, you can do a buy and sell trade, but you have to quickly watch and keep stop at entry and quickly book profit on the upside move. And early or the late session only you can do it, not during the mid session. You do during the mid session, they may show some loss in your position. It might induce you to reverse the trade. Don't do that in a distress condition. Then Tarun, do you look at the chart pattern candlestick? I stopped looking at it about 15, 16 years back, sir, because I find that being a statistics professor, I was using it extensively and found that the players also use the same in trying to trap the traders. So when you talk in a language in which your enemy is trying to understand, then there is no secrecy in that. So you have to talk in a language wherein the other person is not able to understand. You have to outsmart. That's what the players do it. So you should try to read their language, code language, and then do it. You'll be able to really conquer the market. What time frame do trade on? I am situated in India, so I'm able to watch the market all the 3 sessions, and Japanese session, European session, and US session. Almost to that of the midday of the US session, around 18 GMT, I'm able to watch. So what normally I do is position myself during that of the Japanese session, following my forecast and keep the hedge order and afterwards keep stop at entry. Then book profit during that of the US session or the European session. Is euro to go up to 1.14 till August? Yes, that is what the forecast says. Then Shelton, do you recommend trading if the net change? Okay, that's what I answered. Then Albona has got a question. Sometimes data digit wrote in minds and sometime plus like 124 and only 124. I'm not able to understand what he's trying to tell me. Probably he's talking about the net change. I'm not able to get it, what it means. Oh, you're asking. Do you do any teaching face-to-face? I give online training, how to become a professional trader. And many of the traders who have taken the course from me, they visited me and seen me and see how exactly I'm doing the trading in the market at ease. They try to watch and learn it, how we can be patient and trade successfully. And there is no face-to-face teaching is needed. It can be an online teaching from one part of the world to another part of the world, as long as you are able to understand. And I try to explain it in such a way, depending upon the entry level of the trader, so that they are in a position to understand easily. So, but I'm not trying to use this to promote my programs. So it's available in my website, iknowindices.com. There you can get it, or send me an email. Are you from India? Yes, I'm from India. Okay, no more questions. So let me wind up the webinar. So I'm not recommending any position at the moment for the US session. As I told you that they are expected to make the slide in the case of Euro GBP, they are already doing it. And one can do a sell and buy trade in the case of Euro and GB. I have one position in USDN, and that when they gain the level, I'll try to book profit. So that way, do about 2-3 trades in a day and try to capture some profit. Consistently try to earn money from that other market. That's more important, rather than developing a tendency to hold a position and talk about the economic conditions of various countries and telling that your analysis is perfect, only the market has gone wrong and things like that. So such talks come out of frustrations or out of ego. That does not earn you anything. So ultimately, keep in mind that the market is known to make its own moves, but we should try to read as much as possible. The event, if you are not in a position to read it properly, then always you go in for the trading strategy. Thereby, the trading strategy will protect your equity and try to help you to maximize the profit. Today, in the case of USD I had done the trade of that nature. When they dropped, unhedged me and dropped, I captured the profit on the downside and kept the hedge order. They started gaining the level. I'll try to book profit on the buy side also. And sleep on some more. Yeah, this is my Skype chat ID. I know indices at hotmail.com. Okay, thank you. So I'll come back on Thursday and do the Asian session live market analysis and review the forecast, what I have given it, and also try to find how exactly the market is expected to behave for the rest of the days of the week. So thank you one and all. I take this opportunity to thank FX Street for the facilities provided to present the webinar. See you on Thursday. Wish you all happy trading.